Zoom. And we are real excited because we have one of my favorite people, Chantel Hoffman, who is a CPA and owner of White Sands Tax Solutions. And she is an expert in FIRPTA as well as many other things accounting wise. I used to work with her years ago too. So we have a little bit of a history together there, and she's just been awesome. She'll take great care of clients and all that. But today we're here to just kind of enlighten you guys with some interesting things about FIRPTA, things you need to know. And so if you do, just so you know, this is a webinar form. Okay, just so you know, it's a webinar format. So you will not see any faces except for the presenters. If you do have any questions, please use the Q&A or the chat box, and we'll be watching out for those. There is a few segments in this class. So what Chantel's going to do is after each segment, we're going to go ahead and look over any questions you may have, go over those before we move on to the next segment. So feel free to use chat, question and answer, raise your hand, whatever works for you. Chantel, if you want to give a little more background too, if you want, or if you want to dive in, whatever you want, I'm going to go ahead and give the reins to you to get started on this FIRPTA class.
Thank you, Beth. I'm so excited to be here. I'm so excited to talk to each of you about something that I am very passionate about, and that is FIRPTA. I know that's probably not everyone's favorite topic to discuss, but it is mine, or one of mine. So I'm really glad to present the information that I've learned to you, hopefully make the process a little bit less scary, and maybe answer some of your questions. And I'm always happy to be a resource for you after the presentation. I'll have my contact information available. Always happy to just, again, be a sounding board. If you just have questions or you weren't sure you understood something correct, or you have clients with issues, I'm happy to kind of walk you through this process. So I discovered FIRPTA while I was working in Canada. So I'm actually Canadian, now US as well. So I'm a dual citizen, but it's something that I've dealt with personally, and kind of from an outside the US perspective, which I think helps my clients a little bit more, just because I have a little bit more of a diverse background in that area. I also practice in international tax and really enjoy that as well. But the reason why I like FIRPTA so much is there's so many small nuances. There's so many things that I learn every day. And to me, it's really important for you to have a good resource that you can ask questions for. I found not many good resources out there, even when I'm looking for information. So I think it's important for you guys to have somebody that you can reach out to. My focus is always on education, and I really try and be helpful to my clients. I am now living in Florida, which is much warmer than Canada. I'm quite happy to be here, but I've always thought of Phoenix as my second home. So it's still very near and dear to me. I've spent a lot of time growing up in the area. So anyway, without further ado, let's get started. So FIRPTA stands for the Foreign Investment in Real Property Tax Act. Basically, it was enacted in Congress in the 1980s. It's been around for quite some time, but it's changed a little bit over the years. Many countries have kind of a similar provision that they also have enacted. Its overall goal is just to kind of level the playing field. So you never want people from another country to be in a better situation, especially from a tax standpoint, than your own citizens. So a lot of countries have similar provisions. Canada, in my opinion, is actually worse, but maybe that's because I just I'm not as familiar with the nuances. But in any case, it is quite common. They may have overcompensated a little bit in just making this quite challenging for foreigners. But if you know the tools to navigate it, it's not too scary. So who is responsible for FIRPTA? Well, basically everyone. The way the IRS looks at this is if they make everyone involved, then it should be taken care of or at least addressed overall. So the buyer is kind of the first point of contact for the IRS. If they think something's gone wrong, they usually look to the buyer first to make sure that FIRPTA was actually addressed. That's the buyer's primary responsibility. I kind of relate it to an employer withholding tax on behalf of its employees. So as the employer, you're responsible for requesting how much tax should be withheld from your employees. You're responsible for making sure that it gets sent in to the IRS, but you're not necessarily responsible for the actual tax paid on those transactions. You're not responsible to chase down your employees and make sure that they file their own tax returns. So it's kind of a similar concept to that. Then obviously the seller is involved. They're the ones who are required to actually pay the tax, and it's coming out of their side of the transaction. That one's pretty clear. The title company, usually their responsibility is more to ask about the foreign status of the seller. Usually that's part of their closing packet. And then if FIRPTA does apply, then they're the ones to actually help facilitate that transfer. And we'll kind of talk about that a little bit more later on. The realtor, you guys, you are generally the person closest to the seller. You know, likely you're the one who's going to get feedback that perhaps this person may be considered foreign. The earlier, in my opinion, that you kind of address that as an issue, the easier closing is going to be. So the more questions you kind of ask up front, and the earlier on in the process you start setting yourself up for success and your clients up for success, the smoother that transaction is going to be in the end. As far as the liability, this is always an interesting question. So as the realtor, you can potentially be liable up to the amount of your fees. So just keep that in mind, that you do have some legal responsibility here. I've never, you know, in my practice, I haven't seen it go to that level, but just it's good to be aware of, you know, that there's some potentially monetary issues there as well. So how do you as a realtor identify someone who might be foreign? I mean, beyond the obvious, you may find that the seller that you're dealing with is maybe less familiar with the closing process as somebody else that you might normally deal with. Maybe some common terms they're unfamiliar with. They need a little bit more hand-holding, a little bit more guidance than your average seller. You know, obvious things to watch for is a foreign address. That's a pretty clear indicator that something needs to, that questions should be asked. And one of the things that I always mention, because I've seen it happen so many times, especially with Canadians. So Canadians like to be really nice and really helpful as much as possible. And so on the forms, you'll ask for them to include their social security number. And their Canadian number is 9 digits as well. It fits perfectly on the line. We just have our dashes in different spots. And so your Canadian clients will think that they're being very, very helpful. And they will provide their Canadian social insurance number where it requests their social security number, not realizing that that is potentially an issue down the road. So just be a little bit cautious about that. Sometimes somebody who is foreign doesn't appear to be. They don't have a foreign sounding name. Maybe they still even give you a number, but it's still important to continue to ask questions and dig a little bit below the surface so that you can address a potential FIRPTA issue as soon as possible. So before I go on to the next slide, I just wanted to pause, see if there's any questions on this kind of introduction and sort of what are those realtor responsibilities. So if, Beth, do you see any questions there?
I do not see any as of yet, so.
Okay.
But I will keep my eye out for them.
Okay, I will continue on. That piece is relatively straightforward, but if anyone has questions, you know, on prior slides, please don't hesitate to ask. Okay, so what kind of defines somebody who might be foreign? The IRS takes sort of an unusual look at this. There's a few different factors where we can prove that they are not a foreign person. So I always like to start the conversation here, because just because somebody has a foreign passport or was born in another country doesn't always make them a foreign person, especially for FIRPTA. So the first question is, are they a US citizen? Maybe they're a US citizen by birth living in a foreign country. If that's the case, FIRPTA does not apply. You don't have to worry about any withholding. Pretty simple answer there. If they do have a green card or a permanent residence card, again, in most cases, FIRPTA does not apply. Then the next kind of level that we might look at is the substantial presence test. So this can be kind of confusing, but basically if they meet the substantial presence test and they're filing their US taxes as a US person, then again, FIRPTA doesn't apply and we don't have a withholding issue. So if we can meet these requirements, usually it puts our clients in a better position. So the substantial presence test is an actual calculation. So first of all, we look at the current year. So for 2021, that would be the current year. So we would total up the number of days that they were in the US. If they are in the US more than 183 days in the current year, we don't really have to go further. They're already considered a US person under the substantial presence test. But let's say they were a little bit under 183 days. Maybe they were here for 120 days. So then we would look to the prior year, 2020. And see how many days they were here at that point. So, and then we would take that number and multiply it by 1/3 and add that to the number of days in the current year. And if we still don't meet 183 days, then we can go back one more prior year. So 2019 for today's example, and multiply that by 1/6 of the time. And then if the total of those three kind of factors is greater than 183 days, 183 days is half the year, then the IRS says, okay, you're a US person and you meet the substantial presence test. Sorry, one second. So that's always an important piece to ask the client. If they're here for work for a handful of years, perhaps they meet this test. Maybe they're snowbirds trying to escape the Canadian winter, and they spend, close to 6 months out of the year in the US. Then maybe they meet this test that way as well. So that's something to be aware of. But that still is a little bit more on the surface. So I always like to take it to the next level and just dig a little bit deeper, ask a few more questions. So the next question I ask is, do they file a US resident tax return, a Form 1040 like you or I would file to declare our income in the US? And then beyond that, do they also include their worldwide income and financial activity on that tax return? So I always like to ask a few more questions and just make sure that I have a really good understanding of my clients before I make a determination. Once I determine that they are considered not foreign, what we would request is that they sign a non-foreign affidavit. So what would happen is if the IRS were to ask questions down the road, they would again contact the buyer first. In most circumstances, they'd contact the buyer and the buyer would say, look here, the seller declared that they're non-foreign. This is the non-foreign affidavit. I have no reason to believe otherwise. So here is my proof that FIRPTA did not apply on this transaction. So yes, go ahead, Beth.
Just before, because this question goes back to the forms we were referring to when you're when the Canadians write in their tax ID numbers, it just says what forms are you referring to where they enter these numbers?
So it can be, a lot of times those are internal forms. So maybe they're a form provided by the title company to request their social security number. Sometimes it will be on a form W-9, which is quite common. You can Google that and just see what it looks like. So that might be the form that you're requesting. I've even seen it on like a mortgage application when they're buying the property, that they put in their social insurance number rather than their social security number. I've actually seen mortgages awarded based on the social insurance number. I'm not sure how that got through, but it did. So it can come in all, there's no set form, I guess, that they would be required to sign. It's more dependent on what the title company might request of them. Are there any other questions on this area? No? Okay. All right, we'll keep going. Okay, so my second favorite option to reduce FIRPTA, and one that I use all the time, is called a personal use affidavit. And this is an interesting thing that Congress has included. I kind of understand it, but logically it doesn't always make the most sense. So basically what it says is, if the buyer intends on using the property personally for the first 2 12-month periods, and they're willing to sign a form stating that, we can reduce the FIRPTA withholding, which is fantastic. So by personal use, that includes immediate family members. So parents, siblings, children, those all kind of qualify under that personal use. It does not have to be a primary residence. It can be a secondary residence, but its primary goal cannot be, as a rental or investment activity. It can be rented. It just needs to be used personally more than as a rental. So that can be a little bit confusing. Hopefully my explanation kind of makes sense. But it's quite a simple form. And if the buyer is willing to sign it, if the sales price is less than $300,000 and the buyer signs the personal use affidavit, then the FIRPTA withholding on that transaction is 0%. So that's all the pieces of information that we would need, even if we really do have a foreign seller. It's a great offer for the foreign seller to kind of reduce that FIRPTA withholding down to 0. If the selling price is between $300,000 and $1 million, and the buyer signs the personal use affidavit, we can reduce that FIRPTA percentage from 15% down to 10%. So again, 5% savings for one piece of paper is significant for most clients. So we always encourage that. If the selling price is over $1 million, or if it's, primarily for rental or investment purposes, or if it is bare land, unfortunately, we cannot use the personal use affidavit in any of those circumstances, and FIRPTA is withheld at 15% of the sales price. So what the piece that's really important for you as realtors, and this is why it's so important to understand if your seller could be considered foreign upfront, is you can include in the listing some verbiage basically stating that you're looking for a buyer who would be willing to sign this form. So I don't know exactly how it works. I'm not a realtor. This is just from talking to other realtors. I believe that you can just include some language to other potential realtors looking at this property to say, we're looking for somebody who's going to be willing to sign this affidavit. So if you do that, and maybe the sale price would have been $305,000, you might be saving your client some headache by dropping the sales price down to $300,000, or maybe inducing the buyer to sign the affidavit by dropping that price down slightly and putting your clients in an overall better situation. So just pause there again. Beth, do you see any questions at this point, or should we continue on?
No more questions at this point.
Okay, perfect. So I should add that the personal use affidavit or the non-foreign affidavit are both signed under penalties of perjury, and they're required to be notarized. So just keep that in the back of your mind as well. Okay, so the next step is just, I wanted to explain kind of the FIRPTA withholding tax process to you. So normally what would happen is the buyer would fund the transaction. The title company is going to hold the applicable FIRPTA percentage at closing. And then the seller would get a reduced amount to kind of take into account that FIRPTA withholding that's required. So typically the title company is the one who's going to help facilitate that transaction. It is required to be submitted to the IRS within 20 days of transfer. So I always make sure that that's very clear. And it's important to work with the title company who's familiar with FIRPTA transactions so they can make sure that they meet that time obligation for you. The check for the IRS needs to have some direction. So attached to the check is these two forms, these Form 8288 and Form 8288A. The Form 8288 is kind of like the summary form of the 8288As, and it is required to be signed by the buyer. The 8288A is kind of like the tax slip for that transaction. So each foreign seller is required to have their own form. So let's just say, and I've seen this happen where it's husband and wife selling a property. Maybe they live in France. The husband is a French citizen, the wife is a US citizen and French citizen. And so her 50% of that property is not required to have FIRPTA withholding because she's also considered a US person, but his 50% is. So it is possible to have FIRPTA only apply on a percentage of the transaction. And so we would kind of split the proceeds or between the two and apply that applicable percentage to the foreign person. So we send this whole packet into the IRS within 20 days of closing, avoid any issues. And then the IRS has a chance to review the forms. And once they kind of process that check and the forms, what they'll do is send back a stamped copy of the Form 8288A to that foreign seller. The stamp is really interesting. It's just a red stamp with a series of letters and numbers on it. It doesn't look official at all. It looks kind of like a crayon or toddler put it together, but this is the official IRS copy. So keep it safe. What will happen then is that when the seller does file their tax return to request a refund, the stamped copy of the 8288A is not required at that point, but in some cases the IRS will request it at a later date before processing that refund. So it is important to hold on to and just keep in a safe place in case the IRS asks for their copy back. Any questions, Beth, or should we continue on?
Yes, we do have one.
Okay.
And since I'm not an escrow officer, I'm not going to answer this one. I'm going to let you answer. But it says, where does one obtain the affidavit for personal use for my client to sign?
Yes. So in rare cases, I've seen like a title company or an attorney's office have one on file that they'll be prepared to provide. In most cases, we would actually be engaged to provide that form. So we would talk to the client, make sure they're eligible to sign, and then we can provide that form to them to be signed at closing. Anything else there? All right, we'll keep rolling. I don't want to keep anyone any longer than I have to. So, okay. Withholding certificates. So this is a question that I get frequently because there's this magical thing out there called a withholding certificate. And if the IRS approves one, then they're not required to hold those funds at closing. The withholding certificate basically reduces that FIRPTA tax to the closer to the actual gain on the sale. So there's kind of a specific formula that the IRS requires for us to calculate. But in most cases, the clients paid something for the property that they're selling. And with FIRPTA, they don't take into account what that amount was. They don't care whether you improve the property significantly or what was done. They just look at that actual sales price. So the withholding certificate allows us to calculate that FIRPTA tax on a much better playing field. As of right now, I'm not recommending the withholding certificate for most of my clients. The reason being is that the IRS, as we all know, is still quite behind in catching up from COVID-related shutdowns. Last year, they were taking about 10 to 11 months to process withholding certificates. Now it's probably closer to about 6 to 8 months to process them. Given that it's the middle of August, likely we can request the tax refund sooner than requesting the withholding certificate. So it's not for everyone. It's challenging in these circumstances. In a normal year, the IRS takes about 60 to 90 days to process one of these, which is fantastic. I will talk about them a little bit just so that you're aware, but for right now, it's just creating more problems than it's solving. So I'm not recommending them at this point in time. So in order to do that, what we do is basically send in like a pre-audit of the tax return. So in the withholding certificate includes a ton of information. It includes the purchase contract, the sale contract, the signed contract, all of those. If there were any improvements to the property that we're claiming, we also need to include invoices that were paid to show what those improvements are. We also need to include a statement saying that the seller or that the original purchase was not subject to FIRPTA, or if it was subject to FIRPTA, that it was addressed correctly. That's where a lot of these things, the withholding certificates will get denied if we don't have the proper verbiage for that. So it's a huge packet that goes into the IRS. It's also required that the buyer and the seller have US identification numbers, so we can include those applications with the withholding certificate, but again, you're just further delaying the IRS to be able to process those applications. And then the most important part of a withholding certificate is that it must be filed prior to the date of transfer. If you send in a withholding certificate one day late, the IRS does not even look at it. They just deny it. And then you've done all this work and it will not go through. So very important to file it prior to the date of transfer for that property. There's a little known thing called an application for an early FIRPTA refund. This kind of piggybacks off of the withholding certificate. It's kind of similar in that it sends in all the same information, but in the application for an early FIRPTA refund, the IRS already has the money sitting there. And then you're just requesting for them to send the refund back sooner than waiting to file the tax return. So it's a little bit more complicated, a little bit more challenging to get through the IRS, but just so you're aware that that is an option potentially available. So I know that was a lot. Is there any questions on withholding certificates?
There actually is another question on Just is the tax based on sale price or profit?
So under FIRPTA, it's based on the sales price, but that's just the withholding tax. The actual tax at the end of the day is based on capital gains tax. So in just about every client that I've ever seen has a huge refund because FIRPTA doesn't take into account the purchase price of the property, or those potentially large improvements.
That was the only other one I have so far. So
No, that's okay. So this is another kind of important topic, and that's the actual ITIN numbers. So we'll spend a little bit more time on this slide, and then the rest are a little bit quicker. So just to keep things moving along. ITINs, the individual taxpayer identification number, is the number available for clients who are not eligible for a social security number. So it is required to file the tax return. So it's not required at the closing stage. It certainly makes things easier if they have it for closing, but it's not required by the IRS at that point. The ITIN number basically gives the IRS a map of where to apply these funds. So of course it's easier if they have a number to actually use to track that person. So with the ITIN number, the client has to provide verification of their identity. So that's kind of the first piece of it. Most often that's a passport. The passport is kind of the one document that's a standalone document. If they don't have a passport available, then we can look at other options. But in most cases, I usually just refer to the passport as the best option. There's three options available to verify or to show proof of your verification of identity. So the first one is in person at an IRS Taxpayer Assistance Center. Those have been challenging again right now to get appointments with. An appointment does need to be made prior to applying. And not all IRS offices are equipped to accept the ITIN application. But if your foreign seller is actually in the country, this might be a good option for them. So what they would do is they would take their ITIN application, their whole packet, and bring it to the IRS office along with their real passport. The IRS agent would then review their passport and they would submit their ITIN application right there. So that can be a good option if clients are actually here. If they're not, then that makes it a little bit more challenging. The next option is to obtain a certified copy of passport, and that has to be from the passport issuing authority. So it's not a notarized copy. It actually has to be from whoever issued the passport themselves. So for Canadians, because I'm quite familiar with that system, it would be from Passport Canada. That's who would put together that certified copy. So that might be an option. Then the certified copy is attached to the ITIN application. The third option would be to work with a certified acceptance agent. So I also am a certified acceptance agent. So this is something that I can do for clients. Basically, in this situation, they would mail their passport to me if they're not, in the country. They would mail their passport to me, and then we would conduct like a Zoom or a video chat with them. I explained to them what the ITIN is, the process for getting them. And then I can actually certify their passports myself and then mail their passport back to that client. So it can be a good option in certain circumstances. There is a fourth option that I don't even include because it's awful, and that would be to mail your real physical passport to the IRS. Please don't ever recommend to your clients that they do that. It's basically lost forever, and I hate to say that, but it's not a good option. It is on the table. Just please don't ever do it. The IRS is kind of a black hole for documents, so I would never recommend that a client do that. Usually we can find a better option, although sometimes clients do without telling me. It's happened to me twice now, never to be seen again. So, but anyway, so that's kind of the 3 ways to verify your identity. The IRS has started to run out of ITIN numbers, and they are trying to figure out how to deal with this. And so one of the things that they've tried to do, because they're running out of numbers, is now you have to have a valid reason in order to apply. So that valid reason has to actually be attached to your ITIN application, or the IRS will deny it. So you can, the best valid reason is a tax return. So if your ITIN application is attached to your tax return, you have, a pretty solid chance of getting that number assigned if everything else is correct. Another option would be to include the signed contract for sale. That is another option. And then a third option would be to attach it to the withholding certificate, if that's the route that that your clients decided to go. So it is important that they have a reason to apply. The IRS will not let you be proactive in the way that you would like to be. You kind of have to wait until something has triggered that reason. And then again, along the lines of the IRS is running out of numbers, they've also started to expire ITINs. The process for renewing an expired ITIN is the same as applying for a new ITIN. So just keep that in mind. If the ITIN is expired, you may also need to recommend to your clients to jump through these hoops to get it reinstated. The timeline for processing ITIN numbers is about 9 to 12 weeks. And so just keep that in mind as well. Nothing is fast with the IRS, especially right now. So yeah, any questions on the ITIN numbers, ITIN application process? We're good?
Nope, not yet. So
Okay.
we are good.
All right, we'll keep rolling. Okay, so one of the things that I just wanted to touch on is when you are representing the buyer and the buyer is foreign and you're having these conversations with them, and they may or may not mention to you that their intention is maybe to rent the property while they're not here. And so they will be very, very happy if you give them a little tidbit of information that I just wanted to include here. So in general, they have 2 options. So either if they're very against filing a US tax return, they don't have to. If they work with a property manager, then the property manager would withhold 30% of the rental income and send it directly to the IRS on their behalf. So if they have $1,000 of rent income, that means $300 of it goes directly to the IRS. Again, if they really don't want to file a tax return, this is the best option for them. But I rarely actually recommend that because that is a lot of tax. And as we all know, rental properties don't always make a ton of money. So if you're sending in that much to the IRS, you're likely losing. The other option is to file a US non-resident return and make a net rental election. In that way, they would file the non-resident return is in a little bit of a different format, but it includes the same rental schedule again that you or I would fill out on our tax return. So the same expenses are allowed. And then they would likely pay much less tax at the end of the year, rather than 30% of the gross income. So if they do decide to use that net rental election and file the US non-resident tax return, just keep in mind that they are required to include depreciation as part of that calculation. If they don't, the IRS just assumes that they should have, and the tax situation, once they do go to sell that property, could be less favorable. Any questions there? Keep going.
I would keep going so far. So
Okay, perfect. Okay, so I mentioned this earlier, but with the Form 1040-NR, that's the form that your foreign sellers would file for their tax return. Again, FIRPTA is not forever. FIRPTA is just a withholding tax at the front end of the sale. And then the actual tax is based on the capital gains tax rates. So in most cases, the clients are due, a decent refund at the end of the year. A non-resident return, they get a little bit more time to file. It's not due until June 15th, which can be nice, but in most cases, those clients want their refunds back just as soon as they possibly can. So we usually file them much sooner than June, but that's the deadline for foreign persons. And then, of course, often they will have the state return to file as well. So one of the things that I wanted to mention as well is a lot of times I see a US LLC that's formed to own the property. And a common kind of misconception with that is that because it's a US formed entity or a US formed trust, that FIRPTA would not apply because it's a US entity. Unfortunately, the IRS is not so generous. If the owners of that LLC or the beneficiaries and grantors of that trust are foreign, then we're required to look through kind of that initial veil. And if they are foreign, then they would still be subject to FIRPTA in the same capacity. The only kind of the easiest exception to FIRPTA is to own the property through a US partnership. US partnerships have their own kind of FIRPTA related provision, but they're not subject to FIRPTA. In that situation, the withholding tax is calculated on the gain rather than the sale price, which is much, much better. So just keep that in mind if you happen to see those two or those three items come up as forms of ownership. Of course, there's other ones available as well, but those are kind of the most common ones. So I thought I'd touch base on those really quickly. But that is about all. Here's my contact information. Please feel free to reach out at any point. Via phone, email. I have a lot of the most common questions that I've encountered on my website, which is www.whitesandstax.com. So I have a separate page. One is dedicated to realtors, one to your buyers, one to your sellers, one for title companies, and then just some more information that I see frequently. So please feel free to check that out. Perhaps it will help clarify some of these questions. I know FIRPTA can be a little bit of a scary thing, but my job here is to make it as easy as possible and just to cut through all the options and figure out what's going to work best for your clients and make sure that that sale closes on time. Every time is always my goal. So is there any other questions at this point, Beth?
Let's see. Do you have information we can hand out to seller?
Yes. So you and I actually came up with that brochure that's available. So I don't know if you can forward that on to whoever asked the question or post it somewhere that is accessible for them.
Yes, I can do that. Let's see. I'll just yes, I'm more than happy to send that. I can post it on, I'm not sure if I can post it. It's in it's a couple of pages, so it won't work as a JPEG, but if anybody wants it, just let me know and I'll be more than happy to email it to you. And And another thing to know, this is a lot of information, but that's why we have people like Chantel, that you can go to with questions and things like that, because you do want to be careful with advice and things like that. So it's great that you have a lot of those common questions, the FAQs on your website too, because that's nice. And that's also probably information they could give to their sellers as well, right? Your website for that. So, okay, I just got an email, so I will send that to the person requesting. Okay.
Awesome. Yeah, and I hope I didn't overwhelm anyone with this information. I know it's a little bit technical and a little bit complex, but I promise when it's a real client that we're dealing with to make sure that it's understandable and relatable to each client situation. So I try and do my best to just make it not as scary.
Yes, because it is, it is, I mean, we're all in the business and it's still like, wow, it's a lot of info. So that's why we have experts like you to, refer clients to and everything to help out. So.
Yeah. All right. Well, thank you so much for having me.
Thank you,
I hope
Chantel.
you've enjoyed this little chat. And yeah, please feel free to reach out.
Okay, great. And maybe now that the borders are opening and stuff, we'll have more and more of this to work on. So that'll be great. So thank you so much for your time. Thank you everyone for joining. We're really happy to have you here. And if you have any other questions, you can reach, you have Chantel's info, or you can reach out to me and I can get it to you as well. And we have some thank yous for you, Chantel. Thank you so much. Great information. Thank you. So
good. I'll close with one more item. As of right now, I do not charge for consultations. So please, if there are questions, there's no charge. There's no reason not to ask those questions. So please do so.
Wonderful. Thank you so much.
Thank you.
All right. Well, everyone have a great day. Thanks for joining, and we will talk to everyone soon.
All right. Bye.